Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, October the 9th. Prices are mostly green on the screen here this morning as both corn and soybeans recover from yesterday's losses. Corn right now is about two, maybe three better. Beans up 5 to 6 cents. Products are mixed, up a buck or two on the meal, while oil prices have drifted about 5 to 10 points lower. Wheat was the only area within the ag space to close higher yesterday and was up another 7 to 9 cents here this morning. Wheat has continued to be the upside leader, I think largely supported by increased tensions in the Black Sea as missile attacks on grain vessels have been on the rise here in recent weeks. Also yesterday, late in the day, the amount of wheat bought by Algeria in their recent tender, that amount has swelled to reportedly about 500,000 metric tons. Price paid was at around $262 per metric ton on a CNF basis, and likely sourced from a combination of both Russia and Ukraine. Speculative traders yesterday, modest buyers in the wheat, light sellers pretty much everywhere else across the ag space. The U.S. Midwest remains dry and warmer than normal, looking out for at least another week to 10 days and enabling harvest activities to move along at a rather rapid pace. Hurricane Milton just continues to barrel towards the Gulf Coast of Florida as a Category 5 storm, likely to make landfall here early Thursday, possibly as a Category 4 storm, travel across the state, leaving significant property damage in its path from the high winds and heavy rains. In South America, heavy rains or good rains in northern parts of Argentina, while the south and west central remain drier than normal. That's expected to change next week. Similar story in Brazil, as southern areas have had plenty of moisture here as of late. However, systems have been slow to move into the northern and central growing regions of that country. That's expected to change also by this time next week, allowing plantings to start to resume in a more timely manner. We do have USDA reports on Friday. We've got corn production down at 15.145 billion bushels with an average yield at 183.1. While that's still a record, it would be below the USDA estimate last month at 183.6. We've got carryout down at 1.940 billion bushels. That's down 117 million bushels from the USDA forecast last month. Our production and ending stocks figures are both below the average trade guesses. Our bean production estimate at 4.610 billion bushels. That's up 24 million from the USDA number last month. Our yield is at 53.5 bushels an acre. That's also a record high. There too, the average trade guess is looking for about a 5 million bushel cut. We expect carryout to grow about 10 million bushels to 560 million, and that's about 15 million above the average trade estimate. In wheat, our carryout number here is just below 800 million bushels. We expect higher exports, driving those ending stocks down to that level. And we're really at the low end of guesses there, with the average trade guess about 20 million bushels above our forecast. Diesel corn has recovered back above that $4.20 level here in overnight trade. However, we do remain below the 100-day moving average at 4.25. We think that U.S. demand should remain strong despite the lack of Chinese buying, as we look for lower production numbers in other key growing areas in the world. So I'd look for prices to kind of remain range bound right now. Difficult to rally, I think, in the teeth of what's going to be a pretty quick harvest here in the next couple of weeks. Nova beans, that did bounce off a test of its 50-day moving average here yesterday at 10.5. Resistance well above the market at 10.66.5. And again, I look for wheat prices to continue to be the upside leader here. I would not be surprised to see its inverse over spot corn reach a $2 level here for the first time in about 6 months. Thanks for listening, everyone. I hope you have a great day.